Late at night, long after the office lights fade across the city skyline, a familiar ritual unfolds in countless apartments. Someone sits at a small kitchen table, scrolling through numbers on a glowing phone screen. The salary deposit arrived this morning. For a brief moment, there was relief, maybe even pride. Yet by evening, something uncomfortable returns. Bills, subscriptions, loan payments, a credit card balance quietly waiting. The numbers move, but the feeling does not. This character could be called the prisoner of appearances. Not poor, not irresponsible, simply someone who has followed every rule they were told would lead to security. Work hard, earn more, life gets better. And yet, something strange happens. The salary rises slowly over the years, but peace of mind seems to move further away. The apartment grows nicer, the phone becomes newer, the car payment replaces the old one. Somewhere between the promotions and the purchases, the invisible weight begins to grow. No chains, no alarms, just a quiet obligation to keep going. Because once the lifestyle expands, shrinking it becomes almost impossible. The strange part is that most people never stop to ask the most basic question: what exactly is money? Not the textbook definition learned in school, not the polite explanation about medium of exchange. Something deeper. Because what sits inside the bank account is not actually wealth. It is something far more fragile, a promise. Money works only because millions of strangers agree it works. A collective belief, a silent agreement that numbers on screens represent value. If that belief vanished tomorrow, the numbers would evaporate like mist. Centuries ago, a small group of institutions realized something profound. Whoever manages trust manages the system. And so a structure quietly formed around that idea. Banks, central authorities, financial systems so complex that most people never question them, not because people lack intelligence, but because complexity discourages curiosity. It is easier to assume the system simply works the way it should. So life continues. Morning commutes, promotions, weekend spending. Meanwhile, something else operates quietly beneath the surface. Inside the banking system exists a mechanism most people never notice. When someone deposits money into a bank, the bank does not simply store it. The bank lends most of it to someone else. This process is known as fractional reserve banking. Only a small portion stays in reserve. The rest becomes loans. Even stranger, many of those loans create money that did not previously exist. Numbers appear in accounts the moment a loan agreement is signed, which means something unsettling becomes true. Much of the money circulating in everyday life exists because someone somewhere is carrying debt. Debt creates money, and when debt disappears, so does the money. This creates a quiet tension inside the system. Interest. If a bank creates $1 million in loans at 5% interest, the economy now contains $1 million. But the borrowers must eventually repay $1,050,000. Where does the extra $50,000 come from? More loans, more expansion, more debt. It is a system that requires continuous growth just to keep functioning. And perhaps the most fascinating part is how naturally people adapt to it. Debt stops feeling dangerous. It becomes normal. Student loans, car loans, mortgages, credit cards, entire lives quietly structured around payments scheduled decades into the future. Yet, there is another subtle transformation that happens inside the human mind. Consumption begins to feel like identity. A larger apartment signals progress. A newer phone suggests success. A luxury purchase hints that life is finally moving forward. Advertisements reinforce the message daily. Social media amplifies it. The culture slowly teaches that financial success must be visible. But here is the paradox. Many people are not truly buying comfort. They are buying evidence. Evidence that life is going well. Evidence that they are not falling behind. And the financial system offers a seductive tool to make that evidence appear instantly. Debt. Debt is consumption that arrives early. The experience today, the payment tomorrow. Sometimes for 30 years. And during those 30 years, something quietly disappears. Freedom. Because once payments accumulate, risk becomes dangerous. Leaving a job becomes difficult. Starting a business feels reckless. Changing careers becomes terrifying. Not because the person lacks courage, but because the obligations have already been signed. And so life settles into a strange compromise. Comfortable but constrained. Predictable but exhausting. A quiet prison built not from poverty, but from appearances. And perhaps the most painful realization of all is this. Most people assume the situation is their own fault. They believe they simply lack discipline with money. Yet, what if the deeper truth is something far more unsettling? What if millions of people are not failing at money, but playing a game whose rules were never fully explained? And if that is true, then the real question is not whether the system is fair. The real question is something far more unsettling. Who actually benefits when the majority of people never learn how money truly works? Some realizations do not arrive like thunder. They arrive quietly, like a slow sunrise after a long night. For the prisoner of appearances, that moment often begins with a strange observation, not a dramatic financial collapse, not a sudden loss, something simpler, a conversation. Perhaps it happens during a late dinner with an old friend who seems oddly calm about money. No bragging, no expensive signals, just a subtle confidence that feels unfamiliar. While others complain about rising bills and endless payments, this person speaks differently. Not about spending, about ownership. That single word begins to shift something. Ownership of assets, ownership of time, ownership of decisions. And suddenly, the invisible pattern begins to reveal itself. There are two very different ways people use money in the same system. Most people borrow money to consume, a car that slowly loses value, a vacation that becomes a memory, a phone that will be outdated next year. The debt increases, but nothing continues producing value. It feels good in the moment, but the financial gravity pulls downward over time. Yet another group uses the same tool, debt, very differently. They borrow to acquire assets, a rental property that generates income, a business that produces cash flow, stocks that grow quietly through the years. In this case, the debt still exists, but something else grows faster, assets. And that is when the deeper mechanism becomes visible. Debt itself is not the true enemy. Unproductive debt is. The same instrument that traps one person can accelerate another. It is not the tool that changes the outcome. It is the direction in which the tool is pointed. This is where compound interest quietly enters the story. Not loudly, not dramatically, just patiently. Consider a small investment, $10,000. If it grows at 10% annually, something curious happens. The first year, the gain feels small. The second year, still modest. But time begins to do something extraordinary. After 10 years, the growth becomes noticeable. After 20 years, it becomes impressive. After 40 years, that modest investment quietly becomes more than $450,000. Nothing explosive, just mathematics unfolding patiently over time. And here lies one of the most uncomfortable truths in personal finance. Compound interest is either working for someone or against them. When applied to debt, it slowly tightens the financial knot. When applied to investments, it slowly unlocks freedom. The wealthy understand this instinctively, not because they are more intelligent, often because they simply started earlier, sometimes through family wealth, sometimes through early exposure to financial literacy. By the time many individuals reach their 30s, their investments are already producing income. Meanwhile, others are just beginning to reduce their debt. Two people working equally hard, yet the math moves in entirely different directions. This realization can feel frustrating at first, even unfair, but something surprising happens when the fog clears. Blame begins to dissolve, because understanding the system reframes the story. The struggle was never simply about discipline, it was about information, about invisible rules never clearly explained. And when the rules become visible, something powerful happens. Choices begin to change, not overnight, but gradually. The newest phone suddenly feels less urgent, the bigger car seems less necessary. The social comparison begins to fade, not because minimalism is fashionable, but because something more valuable has appeared on the horizon: freedom. Freedom does not arrive through dramatic lottery wins or overnight success. It emerges quietly when obligations shrink and assets begin to grow, when money stops demanding attention every waking moment. And that is the turning point in the story. The moment the prisoner of appearances slowly transforms into something new, a different character begins to emerge, the seeker of financial clarity. But this realization introduces an even deeper question. If the system quietly encourages consumption, and if most people unknowingly follow that script, then why does the culture celebrate spending so loudly? Why are advertisements everywhere? Why does social media reward visible wealth, but rarely highlight quiet financial independence? Perhaps the answer reveals something unsettling. Perhaps the system does not simply run on money. Perhaps it runs on human behavior. And if that is true, then the most powerful battlefield in personal finance may not be the bank account. It may be the mind. Once the illusion begins to dissolve, the world looks slightly different. Not dramatically different, just clearer. The advertisements still glow across city billboards, the luxury cars still pass through traffic, social media still displays carefully curated lives. But something subtle shifts inside the seeker of financial clarity. The signals no longer carry the same power, because a deeper realization begins to take root. The system was never designed to create millions of financially independent individuals. It was designed to create millions of reliable participants, people who earn, people who spend, people who borrow. Predictable behavior keeps the machine running smoothly, and for most of modern history, it has worked remarkably well. But understanding the structure of a system introduces an interesting possibility. Participation does not have to follow the default script. Total escape from the system is nearly impossible. Money still needs to be earned, bills still need to be paid. Yet something important can change: the relationship with money. Consumption becomes more intentional. Purchases begin to pass through a different internal filter. Not, can this be afforded today, but a quieter question: what does this cost my future freedom? Sometimes the answer is still yes. Life is not meant to be joyless or rigid. Experiences matter. Comfort matters. But the unconscious spending begins to fade. Slowly, something else takes its place. Margin. A small emergency fund appears, then a slightly larger one. 3 months of expenses. 6 months. The pressure inside everyday life begins to ease. Decisions become calmer. And with that breathing room, the next shift becomes possible. investment. Not dramatic speculation, not chasing fast wealth, just consistent ownership. Index funds, dividend stocks, real estate, small business ventures, assets that quietly work while life continues. At first, the progress feels slow, but something extraordinary happens when patience and mathematics begin to cooperate. Compound growth begins to accelerate. Income from assets appears like a faint echo beside the salary, small at first, but growing, and over time, the character transformation becomes complete. The former prisoner of appearances has become something entirely different, the builder of quiet freedom. This person does not look dramatically different from everyone else, still commuting, still working, still living in the same world. But the internal structure of life has changed. Debt shrinks instead of expanding. Assets grow instead of stagnating. Choices widen instead of narrowing. Perhaps the greatest change of all is psychological. Money stops being the central source of anxiety. It becomes a tool, a resource, something useful but no longer controlling every decision. The person may never appear on magazine covers, never reach billionaire status, but something far more valuable quietly emerges: control over time. The ability to leave a job that no longer fits, the freedom to explore new ideas, the space to prioritize health, relationships, and creativity. And perhaps that is the most misunderstood truth about wealth. True wealth rarely announces itself loudly. It appears quietly, in calm mornings without financial stress, in the ability to say no, in the absence of constant urgency. The system may still exist exactly as it always has. Debt cycles will continue. Advertisements will still whisper promises of happiness, but the individual who understands the rules now moves differently within that system. Not perfectly, but intentionally. And that quiet shift changes everything. Because the ultimate question was never simply, how does money work? The deeper question has always been, will money quietly shape the direction of life, or will life finally begin shaping the direction of money? There comes a moment in many financial journeys that is strangely quiet. No fireworks, no sudden wealth, no dramatic turning point. Just a small realization that feels almost invisible from the outside. For the builder of quiet freedom, that moment often arrives during an ordinary day, perhaps while reviewing monthly expenses, perhaps during a calm morning coffee before work, or maybe during a simple walk through a busy city street filled with storefronts and advertisements. The same world is still there. Bright displays promising happiness, limited time offers, luxury items quietly suggesting that success must be visible. But something inside has changed. Those signals no longer feel urgent, because the internal compass has shifted. For most of life, money was treated like oxygen, something that always felt slightly scarce. The next paycheck mattered, the next bill mattered, the next unexpected expense could disturb the fragile balance. It was not just financial pressure, it was psychological pressure, a constant background noise inside the mind. But when financial awareness begins to grow, that noise slowly fades. Not because income suddenly becomes enormous, but because control begins to return. Small decisions accumulate quietly. The emergency fund grows. Debt begins to shrink instead of expand. Investments, though modest at first, begin to exist. And with each passing year, something subtle becomes visible. Money begins to work in the background rather than demanding attention in the foreground. This shift changes behavior in surprising ways. Work itself begins to feel different, not because work disappears, but because desperation disappears. A person who is not financially cornered thinks differently, negotiates differently, walks away from unhealthy environments more easily, takes risks that once felt impossible. The irony is fascinating. The system that once felt like a cage slowly becomes something else: a landscape, a set of tools, a structure that can still be navigated intelligently. The financial world does not suddenly become fair. Inequality still exists. Generational wealth still provides enormous advantages. Some people still begin the race much further ahead. Yet understanding the system provides something powerful, even without perfect fairness. It provides agency, the ability to make decisions with awareness rather than reaction. And this awareness introduces a deeper philosophical question. If wealth is not truly about displaying success, and if money is simply a tool rather than a destination, then what exactly is the purpose of financial freedom? For many, the answer begins to evolve over time. At first, financial freedom seems like escape. Escape from bills, escape from obligations, escape from working entirely. But as life continues, the meaning becomes more refined. Freedom becomes less about doing nothing and more about choosing everything intentionally. Choosing meaningful work rather than necessary work. Choosing relationships rather than distractions. Choosing time over possessions. And here lies the quiet paradox of modern finance. The culture surrounding money constantly pushes toward more consumption, more upgrades, more visible success, more comparison. Yet the individuals who eventually feel most at peace with money often move in the opposite direction. They simplify. They reduce unnecessary complexity. They focus on assets rather than appearances. Not out of extreme discipline, but because clarity changes desire. When someone truly understands how the financial system works, the illusions lose their charm. The expensive signal becomes less impressive. The quiet investment becomes more attractive. And slowly, something remarkable happens. The person who once chased wealth begins building stability. The person who once chased status begins protecting freedom. The person who once chased approval begins valuing time. Years pass, the investments compound, the obligations remain manageable, and one day, perhaps much later than expected, the realization appears. Money is no longer the central character of life. It has become a supporting actor, quietly doing its job in the background, allowing attention to move toward things that matter far more: health, family, curiosity, contribution. The financial system still exists. Banks still lend money. Debt still fuels economic expansion. Advertisements still whisper promises. But for someone who understands the rules, the experience feels entirely different. The game is still being played, yet the pressure to win by society's definition has quietly disappeared. Because the deepest victory in personal finance was never about accumulating the largest number. It was about reaching a moment where money stops directing life's decisions, and life finally begins directing money. So the final question remains, just as quietly as the story began. Now that the rules are visible, what kind of life will those rules be used to build? Long after the spreadsheets are closed and the numbers stop demanding attention, something unexpected begins to emerge. Not wealth in the way advertisements promise, something quieter: perspective. Because understanding money rarely changes life overnight. What it changes first is the way the world is seen. A crowded shopping mall suddenly looks different. Not unpleasant, not wrong, just revealing. Bright lights, seasonal discounts, carefully designed store layouts. Every corner engineered to make spending feel natural, almost effortless. For years, many people moved through these spaces without questioning the choreography behind them. But for the builder of quiet freedom, the choreography is now visible. The subtle psychology, the urgency created by limited time offers, the social proof hidden in popularity signals, the quiet suggestion that happiness is just one purchase away. None of this is accidental. Entire industries are built on understanding human behavior better than individuals understand themselves. And that realization can feel unsettling at first, not because the system is malicious, but because it is efficient. It knows how to nudge decisions. It knows how to turn desire into habit. It knows that most people are not irrational. They are simply tired, busy, and overwhelmed. Which is why the most powerful financial decisions are rarely dramatic. They are quiet refusals. The refusal to upgrade a lifestyle simply because income increases. The refusal to compare personal progress to someone else's highlight reel. The refusal to trade long-term freedom for short-term validation. None of these decisions look impressive from the outside. In fact, they often look boring. But inside that quiet restraint lies a surprising form of power. Because every financial system, no matter how sophisticated, ultimately depends on one simple behavior: participation. People earning, people spending, people borrowing. Without participation, the system loses momentum. And this is where the story reaches its most subtle conclusion. Freedom in modern finance is rarely about escaping the system completely. It is about participating consciously instead of automatically. The builder of quiet freedom still works, still earns money, still pays bills, still lives inside the same economy as everyone else. But the internal dialogue has changed. Before a purchase, a new question appears. Not, can this be afforded, but something deeper. What kind of life is this decision quietly shaping? Sometimes the answer will still lead to spending, experiences with friends, comfort inside a home, tools that make daily life easier. Money is not meant to be hoarded endlessly. It is meant to support a life that feels meaningful. But the unconscious consumption, the purchases driven by comparison, anxiety, or impulse, begins to fade. And over time, something almost magical happens. The distance between income and expenses quietly widens, not through extreme sacrifice, through awareness. That widening gap becomes possibility. Possibility becomes investment. Investment becomes stability. And stability becomes something that money itself cannot directly purchase: peace. The peace of knowing that a job can be changed if necessary. The peace of knowing that unexpected expenses no longer cause panic. The peace of knowing that time, the most limited resource in existence, is slowly returning to its rightful owner. This peace rarely appears in financial headlines. It does not trend on social media. Yet for those who experience it, it becomes one of the most profound forms of wealth. Because at the end of every financial journey, the numbers themselves are not the true destination. Money is only a language that expresses choices. Choices about time, choices about priorities, choices about the kind of life quietly being constructed day by day. And perhaps the most powerful realization of all is this: the financial system may shape the environment, but it does not have to define the individual. Within the same world of debt, consumption, and financial complexity, two people can walk completely different paths. One chasing signals of success that never quite satisfy, the other slowly building a life where money serves a purpose rather than demanding attention. Both paths exist inside the same system. Both are available. Which brings the story back to the question that has quietly followed every chapter. Not a question about markets, not a question about interest rates, a much more personal question. Now that the hidden architecture of money is visible, what kind of relationship with money will shape the years ahead? Because the answer to that question will quietly determine something far more important than wealth. It will determine the direction of a life. And that decision, unlike money itself, is never printed, borrowed, or created by a bank. It is chosen, one quiet decision at a time.